I talked about Halozyme Therapeutics back in November, which today shot up 18% and is up 17.5% since I talked about it, even though the S&P is down. Let's talk about first why my timing was terrible, and then why I still like it. The company stock crashed days before the company publicly made a bid for a German company called Evotec. And you can see that the stock crashed and the news was reflected days before the news was released. The official release of the acquisition proposal was the 18th, which is the day it hit that bottom. But it wasn't received well, so they withdrew the offer a couple days later. It would have probably been very hard to know that they were planning to make a bid for that company at that time. But I could have looked if they hinted at it in interviews or looked at their cash ratios to see if they were similar as the time they acquired another company back in 2022. However, I still cut my position at a 10% loss because of how drastic the fall was. But when the company rescinded the offer, I realized that it had not fundamentally changed. In other words, if this fall was caused by an acquisition bid and the stock stayed below it after the bid was canceled, then it meant that there was a clear divergence between perceptions and value. Because the stock was in a clear uptrend and to me was undervalued at $50, I took it as another opportunity to buy back in. And when it rallied while the market was crashing, showing relative strength, it confirmed my hypothesis, so I bought more, and I've been sitting on it since then because it's a long-term play. Watch my previous video to see what it does in more detail, but I really like their royalty technology model because they can scale exponentially based on how many more clients they get. The stock has been outperforming its earnings historically and did really well in the latest one, which is why the stock rallied. It has strong margins, strong growth, a good product, and no competitors. It's also reasonably priced at a $20 PE. What do you think? Like and follow for more.